Splendid evening it is to you viewers. Welcome to Equity News on Equity Access, your daily perspective of stock market developments and of developments in the Zimbabwean economy. I'm Ibn Mabunda. Let's get on to business. Our news tonight: government-owned Agribank today held an analyst briefing in the capital with the 2018 financials being released in that regard. Well, Agribank is a financial services as well as banking services provider in the country and is known for its investment in agriculture over the past few years. Well, according to the financials that were released, their profit after tax scaled 66% to $13 million, while of course the loans also grew by 53% to $147 million from $95 million recorded in the previous reporting season. At the same time, the group also secured loans worth $30 million from Agribank, with $20 million of that targeted toward the local manufacturing sector, while of course the $10 million is toward agriculture. Let's just take a deep dive into the stats so that you get an appreciation of how the corporation has actually performed in recent in recent years. Well, to get into their assets structure, 2014, they had net assets of $77 million, which of course were loans in that regard. 2015, treasury bills start to creep in at $24 million. 2016, their TBs continued to grow. 2017, $83 million, moving right up to 2018, where their loans are at $136 million against treasury bills worth $95 million. A cause for concern there with regards to what has actually been playing out in the economy. Well, I had to close up with the chief executive, Mr. Malala. Let's have a look. You did, of course, mention that there was a 53% growth in terms of your gross loans from about $95 million to $147. Yeah. Now, given the fact that we have negatives that have actually been recorded recently to cite the El Nino as well as the cyclone, what do you think will be the capacity of those that you've extended the credit to actually fulfill those debt payment terms?
We are hopeful in terms of where we have asked our relationship officers to visit the clients, that they will still be able to repay, but we can't be 100% certain because there are many factors, so as you say, the drought. We also had Cyclone Idai. We've now had these recent rains, where people may not have finished removing the crop from the field. But we think we will get a reasonable or good rate of repayment. Areas like sugarcane, where we don't expect any problems. Government is going to give us 10 million capitalization for this year.
Right.
We are also made a profit of 12 million, and depending upon government, that could also be plowed back as retained earnings. We are also looking at organic growth again in end of 2019. So we believe that we can achieve the 100 million through organic growth and through shareholder support. The strategic partner, because we don't know the time frame when he comes on board, would want him basically to support the bank through lines of credit. You are looking for medium to long-term financing for the agricultural sector from a strategic partner.
Okay. Now, to talk about your asset book, how much of it is actually denominated in US dollars, considering the fact that you have foreign obligations in that regard?
Basically, I think I would say we were minimally exposed in terms of foreign liabilities. So it could have been maybe about 25 million. Right? But we have an agreement with the Reserve Bank to ensure that it's treated as part of the legacy debt.
I realize. And lastly, on the strategic partner, are you looking local, or that could be a partner from beyond our borders?
I would look beyond our borders.
You did, of course, mention that there was a 53. 2018 financial results. Well, just to get into the footprint of Bancabc, which of course is a part of Atlas Mara, well, you'd find that the bank has a footprint in several countries in the region, including Mozambique, Botswana, South Africa, Tanzania, as well as Zambia, of course, not forgetting Zimbabwe. Well, according to the financials that we released, net interest income increasing 18% to $30.7 million from $26 million recorded in the previous year. Net profit also scaling 108% to $11 million for the full year ended 31 December 2018. Of course, that is attributed to efficient assets as well as liability management. Well, the bank's loan book growing 18% to $217 million compared to $184 million in the comparative period in the year 2017. Again, just to get into the stats, akin to what we just reported for Agribank, you find in 2015 we see treasury bills creeping into their asset structure. 2015, of course, they had $344 million worth of loans, as well as $2 million of treasury bills. 2016 TBs of $50 million against loans of $233 million. 2017, again, the TBs continue to grow, moving right up to 2018, where the TBs are $194 million against 217. Serious cause for concern in that particular sector. Well, moving on to how also the bank has also performed. Fees and commissions increasing by 31% to $11 million from $8.4 million recorded in the previous season. Just to take us back to 2014, where you find that the fees and commissions were 21.7 against interest income of $49.3 million. 2017, well, there is an interesting adjustment to what we actually see playing out, because we have interest income constituting $26.1 million, fees and commission $8.4 million in terms of the net interest against the other category, which is 6.3. Then 2018, there we see $30.7 million in terms of interest income, fees and commission at $11 million against others at $12 million in that particular regard. Well, as we make progress, the African Development Bank during the Easter period did actually produce a documentation that says that Zimbabwe's GDP will grow by 4.2%. This, of course, is very well standing apart or in contradistinction to what the IMF has said. Let's get into the stats so that you get an appreciation. Well, right there in green is, of course, the African Development Bank. Then just beneath that is what you find as projected by the government, as well as what you have the IMF. But let's just have a historical perspective in terms of how Zimbabwe has performed with regards to its GDP performance. From 2010, right here, following, of course, the dollarization as well as the government of national unity, we find Zimbabwe recording a GDP of 15.4%, 2011 16.3, 2012 13.6. That's the dollarization, as well as, of course, a balanced budget. Then things begin to take a southward trajectory in 2013 with a GDP of 5.3, 2014 2.8, 2015 1.4, 2016 0.7% recorded right there. Well, then 2017 we see of course a figure recorded there in terms of 4.7% by government. Then moving on to 2018, IMF says Zimbabwe recorded GDP growth of 3.41, while government says it was actually 4%. Now here's where it gets actually interesting. For 2019, as I said earlier on, that African Development Bank says it's 4.2%. Well, Government of Zimbabwe says it's 3.1, while the IMF says no, it will record a decline of 5.2%. Equity Access analysts say that the government projections are not actually on point, as they expect the economy to decline by 3.2%. Question is, who will be the better prophet in this particular regard? This, of course, would be the stats in terms of the tobacco selling season. Mass sold up to this point in this selling season is 4.3 million kilograms against 6.8 million kilograms recorded in the comparative period the previous season. The value there for 2018 as at this point was $18 million for 2018. At this point, we have got less than half of that, which is $7 million, which is a 62% difference in that particular aspect. Well, of course, other factors coming in: average price of US dollars per kg. Well, you find 2018 $1.65, 2018 $2.69. This, of course, has resulted in an outcry by the farmers who fail to understand why there has been such a drastic change with regards to the prices in that particular sector. Moving on, to Zimra. Zimra is having the 2% tax working as some kind of a Santa Claus, while they record growth of 85% during the first quarter of their Zimra collections. Zimra collecting $2 billion in revenue in the first quarter, surpassing its $1.4 billion target by 42%. Well, on the 1st of October, just to jog your memory, the Treasury introduced the 2% intermediate transaction tax, and that, of course, is working miracles for the Revenue Authority of Zimbabwe. Then, of course, in other news, Mascom in Botswana is readying for a listing. This, of course, is according to a statement released by Steve Masiwa on social media. Most recently, Mascom reacquired a 53% stake in Mascom. Mascom, of course, is Botswana's largest telecoms company with the largest market share at over 50%. Well, that wraps up our news for tonight. Please stay tuned. Up next is a news review with our Equity Access investments analyst. Please stay tuned. Welcome back, viewers. I'm now joined in set by our very own investment analyst, Tinashe Kadu. Tinashe, good evening and welcome to the show.
Good evening, Eben. How are you doing?
Won't complain. You don't get better yourself.
I'm very well.
Splendid. Let's take a deep dive into the pool of the results that we just got from Bancabc. Well, of course, they record growth in terms of revenue as well as growth across the board. Well, of course, even in terms of profit, and it's been a phenomenal performance by the group. What is your assessment of the results that have just been released by Bancabc?
Eben, thank you very much. But if you look at all the bank's results, every bank is reporting, a very good set of results. It's actually, the environment which we are operating in, where we have seen banks capitalizing on the cash light environment. If you look at most banks, their earnings or their top line is actually driven much by your fees and commission income. Interest income for most banks is actually took a knock or remained at the same level in terms of its contribution to total income as a result of a slow growth in the loan book in line with the operating environment. If you look generally, the environment is depressed, your interest rates, they are controlled in an environment of rising inflation and also increased risks as a result of lack of your quality borrowing clients. Some of the slow growth in your interest income, it's actually a reflection of your depth and in hard currency in circulation, which you have seen most banks having little resources to lend to the productive sectors. Most of the companies or individuals in the economy who wants their loans, they want it for retooling, for capital equipment. So there is actually need for foreign currency in the economy, which is actually a scarce resource in the sector. So these, very good numbers actually, they don't actually show, the challenges the economy is actually facing. But this is a very good set of numbers from Bancabc in light of the operating environment.
Beautiful. Can we talk about the growth in terms of the loan book, which grew by 18% to $217 million? How important is that as far as the bank is concerned?
If you look at it, the 18% growth actually led to this improvement of your interest income from 26.1 million to 30.7 million. So if you look at how Bancabc is set up, it's actually moving more towards into the retail space, being aggressive in the retail space. So this is actually encouraging, especially in light of the operating environment.
Okay, now let's move on to Agribank. Agribank also holding an analyst briefing and releasing financial results, spelling out how the group has actually performed. Quite a strong performance. If you check the history where Agribank is actually coming from, and you have Zimra also coming in to bail out the corporation in 2016, and now the bank is actually been on a positive trajectory in that regard. What is your assessment of how the bank has actually performed over the past period?
If you look at from the period when it turned its fortunes from the red to the current, this positive results, you are seeing it's a bank that has been, on a consistent positive trajectory in terms of profitability. Its operating profit or its PAT actually grew up from 7.5 million to the current over 12 million. That's actually an impressive performance from Agribank. But if you look at what drove that level of profitability, it's actually your loans that grew from your 87 million to 136 million. That's an aggressive growth if you look at those numbers. And Agribank has also been aggressive in terms of lending to the productive sector. It has been issuing, your agro bills in conjunction with FBC, which is actually positive to the sector, which is in dire hunger of quality funding. Then in terms of capitalization, the shareholder, the government, has also been supporting the bank. It has been injecting consistently 10 million each and every year in the form of treasury bills to capacitate the bank to reach the 100 million tier 1 capital by January 2020. So I see it as a bank which is actually which will actually meet the minimum capital requirements as stipulated by the central bank.
Now, when I spoke to Mr. Malaba, he did indicate that the bank is looking for a strategic partner so as to, get the balance sheet of the corporation on a completely different trajectory. And of course, he did mention that they would want or prefer to have a foreign player actually come in to partner with the bank. Then he said, also mentioned that there's actually been progress in that regard with Ernst & Young assisting them with the process, and we could actually expect some positives or some drops off the pump perhaps in the next few months. How important do you think that would be to the bank?
It's actually of great significance to Agribank, but my own perspective, from my view, agriculture is one of the key sectors of the economy. If you look traditionally, before the year 2000, Agribank, or those banks, the state-owned bank that was much into financing the agriculture sector, was key in terms of financing the sector. So to see the bank, is so unfortunate that it was actually selected to be part of the SOEs that should be privatized or partially privatized by the government. To me, I see it more of a key institution or key strategic institution, considering how important agriculture is to the economy. So I would rather think that the government would take more of a proactive measure and maybe try to capitalize the bank by itself, rather than ceding control to an external partner. So for Agribank itself, in terms of performance, it will strengthen.
Hold on a second, Tinashe. Look, if we privatize these institutions and we allow more private players to come in, that will actually enhance efficiency. Look, we've had problems with several state-controlled enterprises. We could talk about Net1, we could talk about Tel1, that have not been performing so well. So if Agribank actually has other players come onto the scenes, I'm of the opinion that that would actually enhance the operations of the corporation. Of course, Mr. Malaba did mention to me, of course, aside, and he said, look, the intention or the trajectory of the corporation would actually perhaps move towards a listing.
But to me, I'm saying in an economy, there are some institutions that are of strategic in nature. If you identify your agriculture sector as your strategic sector, which you have maybe to invest much in for your economic takeoff, I think those institutions that are key in terms of financing that sector should also be of your strategic importance to you as well as the government. So to me, for the policymakers, I think they are actually saying, no, we have failed in terms of being more efficient, in terms of making the operations of Agribank more efficient or more reactive to the operating environment. So they are saying, let us cede the ownership or the control to a private player, such that the institution may be more competitive. But I think if the government had been proactive or has been investing much in Agribank over the past years, it should be an institution right now which will be at the core of agriculture revival.
Okay, interesting perspective. We're just going to take a break, Tinashe. When you come back, I know you can't wait to dive into the projections in terms of what is going to play out in our GDP. Viewers, please stay glued to your screen. Tinashe, let's cut to the chase and talk about what the African Development Bank has actually said. They project a 4.2% growth in terms of our GDP, while this stands very much in contradistinction to what the IMF has said, that expects our GDP to actually decline by 5.2%. What is your assessment of the situation that you have playing out here?
I want to comment much on African Development Bank's projections, but I've seen quite of surprising numbers from so many analysts. For instance, there is one analyst who is saying the economy will grow by 6.3%. and I was actually shocked. If you look at how Zimbabwe is set up, our manufacturing sector or all other sectors, they are actually centered on the development or the growth of the agriculture sector. So if we had a bad season, normally all the other sectors follow suit. They'll actually fail or they'll actually collapse. You see negative growth from all those other sectors. So to me, I project, our agriculture sector to experience a deep, negative growth. And then also the manufacturing sector, since the agriculture sector supplies more than 70% of key raw inputs to the manufacturing sector, I see also activity in the manufacturing sector slowing down. Our mining sector, yes, maybe that's the only sector where we might see some positives there. But for it to drive the overall growth of the economy to levels of 4%, I'm surprised.
Okay, you did mention what is playing out in the agricultural sector and how it is that it is actually affecting the performance of the economy in that regard, and perhaps we might not expect things to actually shape up in the near future. Just to look at tobacco and what is actually played out there. You look at the mass sold, it's 38% below what we have seen before. In terms of the value, it's less than half of what we've seen before. It's actually 62% less of what has been recorded in 2018. So the fundamentals seem not to be in place, considering the fact that tobacco is actually Zimbabwe's largest forex earner.
That's exactly what I'm saying. It's actually a manifestation of a bad agriculture season that we experienced during the 2018-19 farming season. Our agriculture sector, if you look at 4.3 million kgs that has been delivered so far at our auction floors compared to the 6.9 million kgs same period last time. This is actually a depressed activity there at the auction floors. Much of it is to do with low output and low production due to this adverse agriculture season.
Now, to get back, of course, to the projections, Equity Access says that we will have a decline of 3.2%. What is the reasoning behind that?
We are actually seeing, a deep fall in the agriculture sector, and in terms of our assumptions, agriculture sector is the major driver of all of the economy. So if the agriculture sector suffers, the whole economy will suffer indeed.
Okay, now just briefly to talk about Masiwa. Masiwa has made a statement. He says his intention is to get Mascom actually listed in the Botswana Stock Exchange. How important would that Econet, and what would be the prospects of that? There is Liquid Telecoms. It's a whole network, of course, for Econet there. What is your take on that particular sentiment?
For Mascom to be listed on the BSC, it actually helps, in terms of, diversifying your risk, especially for the Econet group. It will actually also, help even the Econet group to raise, more capital, and also hedge, against, some of the risks in the markets where Econet operates.
Well, that's about it, viewers, from News Review from Tinashe and I. Please stay tuned. Up next is a perspective on how the stock markets have performed. Please stay tuned.